everyone, this is Vatsal from 100x VC and welcome to episode 2 of 100x podcast. As a reminder, 100x VC is a first check investor in pre-seed stage bootstrap startups from India. We've invested in over 161 startups so far. That means we've had quite a few lessons from them. And we're now sharing a few of those learnings through this podcast. Today, we're doing a deep dive into SaaS and what makes pre-seed stage SaaS startups click. I have with me Shashank Randev, founder VC at 100x. Hi Shashank.
Hey,
thanks so much for joining. All good. Kind of just to do an introduction in the topic, SaaS is the hottest thing in the VC space right now. Everybody wants a good SaaS deal, a good tech deal in their hands. Everybody wants to invest in something in SaaS. There's a reason behind this, right? SaaS is the one business which can truly grow exponentially and create exponential value as a function of the capital infused. That's because basically you need only one laptop and an internet connection to build a SaaS company. That's about it, right? Today, cloud services, AWS, etc. are available like that. There's so many APIs which you can use to ship fast. Online selling has become the norm. You can have inside sales team to do it. Product-led growth is a thing. SaaS companies are built for venture capital, right? And so they're kind of ideal for VCs to invest in. But obviously, as we've seen over the last year and a half with the rise of AI and the ease coming in on, moving everything to clouds, SaaS is no longer as hot as it used to be, right? Just general SaaS. And so let's discuss a few things that are signs of good SaaS businesses that are venture backable, right? For me, the first thing I look at is there one standout thing or feature or outcome you are giving to your customers which nobody else can do, right? And the reason I say you have to have one standout thing is we've seen businesses, for example, that may want to compete with a HubSpot, right? But because they have nothing to stand out, they're always fighting for stable stakes, right? To compete with HubSpot, you need these 15 features before a customer might consider switching to you. And eventually, even if they do switch, they'll probably switch because of cost or because they expect you'll give them more services, right? Which is obviously not ideal. But when you've discovered something singularly better than any of your competitors, right? Whether it's in terms of outcomes, saying, I'm able to drive more revenue for you than any other product in my space can, or I have a feature which nobody else can provide, or I'm doing things better, then the customer will buy your product even if you don't have the 99 other features that competitors are bringing to the table, right? And a good example I think of this would be Xylem AI from our portfolio, right? They started off as an enterprise search kind of a product, right? Where when you're a company, you can search across all your data and find what is interesting.
Yeah.
But what they realized, the standout thing was their inference engine, where they were able to do 3x faster inference at 1/3 the cost,
right,
as compared to any other player, right? And in fact, even today, I think they're already second fastest in terms of inference in the world, and definitely the fastest in India. And that's what enabled them to get some early customers,
right,
start going to market, building out a product. That's something I look at for sure. What is something you look at, Shashank, when you're looking at SaaS companies?
I think you've touched upon a very interesting point. To achieve an early product market fit and create that stickiness, I think it's very important to focus on that one feature as you described it. But I think another point which is important for me is ensuring which vertical you're going after, because you can build something out which is software enabled, a SaaS platform, but if you are directionless in terms of which industry you want to go after, whether it's a BFSI, whether it's a logistics, whether it's ITES, I think you'll have a tough time scaling and getting that focus or getting that stickiness created for that particular given SaaS product. I think the best example would be Data Sutra. When we invested in them in 2019, they were building a very agnostic location intelligence platform, and I think soon they realized that if they could drive intelligence and data for a specific vertical, and now I think they have developed an expertise in terms of in BFSI as a sector. And I think Data Sutram is a great example, having raised multiple rounds, having found that product market fit. Not to say that that's the beachhead market, they will be exploring with other verticals as well. But their journey from -1 to 0, 0 to 1, with 100x coming in with the seed capital, and then their ability to master that one vertical focus, and then moving on to a pre-series A kind of a round, and then continuing that journey. I think that process is very critical when founders are building out. So the vertical focus, in my view, is very, very important. You may want to build everything under the sun, but you should not.
No, very true. In fact, I very recently had a conversation with the founders of Data Sutram, and something else kind of I learned from them was solving for the right problem as well, right? So in BFSI, for example, they're solving for a problem which is very high frequency. A customer, an enterprise customer, finds value if you're solving something for them where every day, every hour, every minute it's a problem for them, and they need somebody to solve it.
True.
Right? The higher the frequency, the more likely that they are willing to pay, because this is just something they need to get rid of as a problem, right? And that kind of begets, because you have to solve a high frequency problem, you have to discover that problem in itself, which means at the earliest stages, pre-seed stages, it is unavoidable, and it is in fact table stakes for SaaS founders to be just shipping rapidly.
True.
It's a constant cycle, right? You have to keep talking to customers, keep understanding what are the problems they're facing, what is the one standout feature you have, and also, is it solving a really high frequency problem or not? If it's not, you change, you figure out another problem, you figure out another feature, something that allows you to stand out.
Right.
But if it's not a high frequency problem, there's a lower chance of you creating a significant business out of it. Right? Another example that comes to mind is a company we recently invested in called Croto. What they do is they help companies, SaaS companies specifically, create technical articles and technical product guides using AI. So all a company has to do is record a simple screen video and just verbally mention your steps over it, saying, hey, I clicked on this, I clicked on this, I clicked on this, and that's how I've created so and so, or I've done these actions in my product. And what it does, it creates a completely new video with like graphics, with animation, with pointer clicking, with steps written, with a professional voiceover, along with a written article. Now this is a high frequency problem because SaaS products are evolving so rapidly that you have to constantly keep updating your docs towards customers, towards developers, whatever it is, right? And so this becomes super helpful. And more importantly, the story of how they discovered is important, right? So they were using this same technology, which was their standout technology, right? One thing they were better was AI-driven content generation. But for a different market, they eventually pivoted multiple times and discovered this is the market where I'm feeling the most pull.
Yep.
So they iterated and they launched a product for this market in like 7 days, I think. Got to market,
close to 7 days.
And maybe under, went to market, got customers on board, and just started shipping and making money already.
Right.
So that pace of development and finding that right problem is crucial.
Right.
Shashank, anything else that you want to add?
I think at the early stage, ability to execute, roll out the product, as you rightly said, and I think we've seen this a lot. Every time we invest in a company and when we take a deeper dive with the founders, the amount of time we spend in terms of defining product development and business development, right? And we spend significant time. I think the next point for me, which becomes very critical, is a team when starting out needs to have complementary skill sets. You need to be able to define sales and product development in a specific timeline and see those roles individually. I think a great example is Vodex.ai, which has been doing some great work. I think Anshul and Kumar have been a very balanced team, where Anshul took the heavy lifting in terms of BD, and Kumar, or I think the other way around, the other one took the role of building the tech out, and automating a very mundane business which has been contributing to India for the last for at least
BPO,
25 years.
KPO.
BPO and KPUs, automating that through voice AI. I think huge opportunity within this segment. I think I read it somewhere. Globally, the voice market is at least 350 billion. By 2027 or 28, if I'm not mistaken, and that is the space Vodex is operating in. But they were only able to reach this far because when we identified them at 100x and we went ahead and invested in them, they were very clear in terms of you build A to B, the other person goes out and pitches A to B and gets product feedback, closes the loop with the product guy, and they kept doing this in a cycle, right? And they kept building this process over and over and over and over. Even so, when they were here in our office last week, you could still see that camaraderie in terms of, okay, when we tried this, we tested this, we came back, and this is what we're doing, right?
So, are you kind of advocating that pre-seed stage startups, sales matters? Do you think product-led for pre-seed doesn't make sense? What are your thoughts?
This might be an outlandish idea, but I think you and I, think on these lines, and I've started thinking more on these lines when we had a conversation on this. Product-led growth in India in pre-series A seed stage, I don't think so. We are there yet. I think founders still need to, whatever they're building in whichever domain, they need to have this mindset very clear that they need to go out and sell, not hire anybody, but sell by themselves, right? Because till the time you don't go out in the market and sell the product by yourself, get instant feedback, get rejected, kicked between your legs, and then you come back and you figure out, you need to go through that anguish and pain, right? That in my mind is very, very important. But founder-led sales, is important. Before that, in early stage SaaS business, I don't believe PLG is a way. You may achieve that maybe post Series A. We only come from a vantage point of pre-Series A and seed, and at this stage, I don't think so. You should be looking at those kind of strategies. You should only look at going out, picking up the phone, cold calling, cold emailing,
Absolutely.
and talking to the customer.
Yeah. No, I agree with you, because PLG takes a lot of capital.
Unless time, maturity of the product.
Yeah, and you need to have that virality marketing engine.
True.
Which is very tough when you don't know what your product actually stands for. You're still
Correct.
in discovery
It's still
mode.
discovering, still evolving.
Absolutely. Having said that, these are some things. I mean, you and I can go on and on about what we like, what we don't like in SaaS.
We need another couple of hours. The entire day we can go on.
But let's kind of talk about what's exciting today
Sure.
to us and what kind of SaaS companies we might be looking for.
Sure.
So one thing I'm very keen on is SaaS companies which bring different kinds of pricing.
Correct.
Which are flipping the pricing models and the business models of previous SaaS companies, right? Companies which are doing usage-based pricing, value-based pricing, micro payments are super interesting to me.
Absolutely.
And the reason for this is, I think the world is kind of at a stage where subscriptions are like, why are we doing that? And there is such a plethora of SaaS applications available today that now I want to see a value and I want to pay for the value I'm getting. So value-based pricing is kind of the most important thing today. It's like if you go to a vegetable market, right? There are 10 different sellers selling tomatoes. You're gonna wanna touch them, feel them, barabar hai, firm hai, and only then will you buy, right? Once you gauge ki, okay, this is the value I'm getting from this particular seller, I'm willing to pay the right price for it if it's a quality product, right? And so we believe it will flip from a flat subscription model to a value-based or a usage-based pricing, or even a micropayments model where the product may be free overall, but there are small microtransactions. And I think I've seen InVideo do this, where over and above their SaaS model, right, for every instance of you using a stock video from their network, you have to pay a micro transaction. So that's very interesting to me.
No, I think
what's interesting to you?
Just adding on that, I think having built a SaaS business which primarily thrived on subscription model in the in 2009, 10.
You're talking about VCC Edge, right?
The importance of static subscription models, they will, if your product is not providing multiple other avenues of information data sets, right, your subscription standalone model works. But even in that, you'll have a certain set of customers you will never be able to understand how they're using the platform. Their engagement levels will not be defined, right? So in 2024, a static standard subscription model, in my view, doesn't work. So I'm completely in agreement with you in terms of user-based pricing, figuring out innovative models over there, because the end objective is, when I look back at the year and I want to see if I had 200 customers, which customer used what portion and how can you continue serving them, because retention plays a major role in SaaS businesses, right? 5th year, 6th year into a SaaS business, your repeat customers matter a lot. So this model which you mentioned, I think gives into that understanding of your current user base, so that you can go after the next set of user base. But I think the other aspect which is interesting, I think I come back to the verticalization again. Building vertical SaaS businesses. We talked about Data Sutram, but that was from a perspective of building your product and identifying one vertical so that you can discover product market fit. But the example now we're referring to is, let's say, building a SaaS product only for a given sector, and understanding how you can build a customized SaaS product offering for that particular sector, whether it could be supply chain, logistics. A
good example would be, I think, MindBody in the US, which is focused on the spa ecosystem.
Correct.
And that kind of takes me
even our portfolio company. So let's say Petal, which we've recently invested, right? So converting existing businesses into SaaS-enabled, tech-enabled businesses. So for instance, Petal is a great example of that, where these guys are bringing the pet ecosystem all together on one SaaS platform. And similarly, there are multiple other examples, and I think that piece will continue to be of interest, I think, for India and to us, particularly at 100x.
No, very, very true. SaaS-enabled business is where SaaS becomes a GTM for acquisition of customers.
Correct.
Summer is another example where they're building these SaaS applications for restaurants, and then they earn from payments going through them.
Correct.
Or more nationwide, if you look at Khatabook, right? They acquire SMBs using SaaS and then they monetize through lending.
Correct.
So SaaS-enabled business is a very interesting vertical, right? You're seeing SaaS-enabled marketplaces, SaaS-enabled authentication, as with Petal and so on.
Correct.
Something that I'm very keen on as well is AI SaaS, and this is last few years, and I'm sure you think, oh, this is what every VC is saying, but the fact of the matter is, so much of the focus has been on doing core model level innovation that I think a lot of application level innovation has still gone under the radar, and we're gonna see a lot more focused vertical, like you said, right? Vertical focused AI SaaS companies, which are automating years and decades old workflows, right? Again, Croto is a great example of that, right? Salesforce, for example, spends almost $20 million a year on technical writers. So this is something companies are spending money on for decades, and these guys at Croto have just flipped the model on their head and said, okay, we're using AI to automate the whole thing. So it's much faster and much more cost efficient for businesses. So I'm very
I think
curious.
another example, which is may not be vertical, but another portfolio companies of ours, hired GPT, which is
Yes, excellent.
which is
Decades
not-
old business
decades old,
processes,
right?
Absolutely.
Building grounds up is another great example of what some of the companies can build out.
So they're automating the top of the funnel evaluation for hiring, right? They say, listen, if you have one job open posting with 1,000 applicants,
Yep.
how do you discover which ones are right or not? So they say, I can't give you the top 5, but from these 1,000 I'll give you the top 100.
Yeah.
I'll do the entire process of filtering them out, matching them by resumes, getting their first level of interviews done, generating questions end to end, everything on one product. And all you have to do is now these are the top 10 candidates.
And while we're talking about this, if you look at the team construct over here, when we invested in them, 3 co-founders, very, very complementary skill sets. One is deep down product individual, building the product grounds up. The other is a sales individual, very clear in terms of what kind of folks they want to go after. Also very clear in terms of their GTM, in terms of smaller mid enterprises, or now as we speak they're going after largest enterprises, because the volume of resumes or hiring which is required, which needs to kind of feed into their system, is much higher, and therefore the pricing can evolve.
That ties into our point of
Correct.
usage based pricing.
Correct.
So they're prime
Correct.
example of that.
Correct.
What else are you looking at? You'd mentioned something to me about India SaaS, that you believe the India market is.
I think we started this conversation with what is it, what one should do if they're building a SaaS business in India. But I think let's talk about why is it important to build in India. I would say that. And 5 years ago when we started 100x.vc, when we started evaluating SaaS businesses, there were a lot of these businesses which were coming in, and we ourselves also were looking at businesses. Okay, these are Indian founders building for the US market. Brilliant. I want to step in and invest in them. I don't think so. We are doing that today. We have Indian businesses being built out of India, where the domestic consumption is quite significant. We've got the ability to build mobile first SaaS products being consumed both on the B2B and the B2C side in India, which is a very interesting angle to phase to be in 2024. I think the whole India story now is picking up. SaaS adoption has increased a lot during, post-COVID. All these acceleration points have come together, right? And many of these businesses, if I can assign a percentage, at least 50% of these businesses which were started, conceptualized, funded up to a Series A, those businesses have been built in India for India. So the largest revenue generator or customers are coming from India.
Yeah, very insightful on the whole India SaaS opportunity. So we're definitely very excited about it. To talk a little bit about the don'ts, what really turns me off when a pre-seed stage startup comes to me, right, is for the sake of showing traction, because every single investor has told them you're too early for us, show us some traction. So they get traction and come to us. But the quality of traction is so bad, like you can't fund them. Let me give an example, right? So if a company comes to me saying we've made 10 lakhs of revenue last month, but all of that is from lifetime deals through platforms like AppSumo or PitchGround, right? That's not something I may probably account for as good or quality revenue that gives me any signal about quality of business, right? See, AppSumo, PitchGround, these businesses are great because it allows you to talk to early customers, early adopters, give them deals and learn from them. But that doesn't necessarily convert to an actual quality customer, right? Just for the sake of revenue, if you onboard wrong customers, give bad deals, don't price yourself correctly, then I don't have confidence. I can't learn anything from your traction. I just know that you've made revenue, but there's nothing for me to learn or gain from that traction. So I think it's very important to have real quality traction, right? Even if it's lesser, instead of 100 paying customers, I only have 10 paying customers, but these 10 paying customers are such quality that they'll tell me exactly who you're selling to, why they're buying, what kind of purchasing power they have, and so on.
I
Do you have
think-
any thoughts?
See, you touched upon a very, very important point, and I think right before this step in terms of selling it to the kind of or the type of customer, I think another mistake, if I can say, the founders end up giving their product for free, right? So I'm coming in a step before, because at our stage we want to understand the product market fit, whether the stickiness is being created. When they hear this a lot from investors like us, they also end up giving the product for free and then showing that as traction and saying, okay, fine, now we've got a customer, we've got a set of folks using the platform, and we're not pricing them, but there's enough stickiness. And we've seen this in some of our portfolio companies as well. And it becomes difficult to move to a pricing model, right? So my recommendation to founders usually is that be very clear in terms of where you come from, even if you're launching a new product, right? So I remember when we launched our SaaS platform 15 years ago, we were very clear on this pricing, which was 2 times higher than the then competitor. But because you were sure what you were building in that particular product, you could essentially then go after the right customer, as you rightly defined, right? So you do this step before and you're able to identify the customer. But as you rightly said, founders end up skipping both these steps, So neither do you end up achieving revenue, neither is the product vertical focused, as we talked about, or has an ability. When we say vertical focus, which means your ability to define the customer, right? And you miss that, you don't get the attention of the early stage fund. So
Absolutely.
completely in agreement with
Absolutely.
you on that.
Wonderful. On that note, as we've already described, for pre-seed stage SaaS companies, it's important to know how you're differentiated
Yep.
from all the competitors. Don't be a feature farm, but make sure
Don't
you
be a
have
feature.
one thing which stands out. B, have a vertical focus. Know which industry you want to sell to.
Yeah.
C, have a good balanced team. No sales, no tech, and more importantly, go out and sell. Don't just wait for customers to come to you, right?
And don't hire anybody to sell on your behalf.
Absolutely. Founder-led.
Founder-led
And
sales.
finally, make sure you're doing rapid iterations and solving a problem which is high frequency for customers. At 100x, we do invest pre-traction. We've in fact invested idea stage and up when it comes to SaaS companies. So we'd be happy to take a look and invite you to apply and join us for class 12 if you're building a SaaS company. With that, thanks Shashank. We'll
Thank
take
you,
it from there.
Vatsal.
See you in the next episode.